Hello students, this video will discuss Chapter 6 Individual Deductions. For this one, there are also 3 learning objectives. And these learning objectives pose these following 3 questions. Number 1, what are common deductions necessary for calculating AGI? Number 2, what are the available itemized deductions available and how to calculate itemized deductions? Number 3, explain the operation of the standard deduction, determine the deduction for personal and dependents exemptions, and compute taxable income. For this video segment, we will focus on learning objective 1, deduction for AGI. Deduction for AGI are generally preferred over deduction from AGI because deductions above the line reduces taxable income dollar for dollar. In contrast, deduction from AGI sometimes have no effect on taxable income. Many limitations on tax benefits for higher income taxpayers are based on AGI. Deductions for AGI often reduce these limitations, thereby increasing potential tax benefits. There are 3 categories of deduction for AGI. Number 1, deductions directly related to business activities. Number 2, deduction indirectly related to business activities. And number 3, the last one, deductions subsidizing specific activities. All right, let's start with deductions directly related to business activities. Congress allows taxpayers involved in business to deduct expenses incurred to generate business income. So in order to qualify, number 1, to qualify for business deductions, activities must be profit motivated, whether or not businesses or investments, whether they are business or investment activities. Number 2, business activities are active activities, whereas investment activities are considered passive. For this one, you may want to look at example 6-1 on page 6-3, and also let's look at exhibit 6-1 on page 6-4. Here's a summary rule of classifying business and investment activities. So here are deduction for AGI and deduction from AGI. What about trade or business expenses? Business expenses must be ordinary, necessary for the activities the businesses engage in. In other words, these activities must be profit motivated and specific for businesses to generate profit. For example, expenses for season tickets to the Dallas Cowboys games are allowed for athletic event promotion companies, but not for businesses whose main activities are not sports related, such as a beauty salon or an antique shop. Business expenses are reported with business revenue on Schedule C. You can see Exhibit 6-2 on page 6-4 of Form 1040. Schedule C is the business income statement, and the net income or loss is transferred to line 12 on Form 1040. Rental and royalty expense. These expenses are reported with rental and royalty revenues on Schedule E. This you can see Exhibit 6-3 on page 6-5 of Form 1040. The net income and loss is transferred to line 14 on Form 1040. So all these schedules, eventually they will produce a number, and then they will be transferred to a certain items or line on page 1040. Please reference example 6-3 on page 6-6 for rental expense. What about losses? Businesses are allowed to deduct losses on the sale of assets and investment loss for AGI. So just remember, this is only for AGI. But there are also limitations, and you can see that especially the last one, the net capital loss is deducted for AGI but limited to 3,000. And anything that exceeds 3,000, then you can carry forward indefinitely to subsequent years and offset any capital gains in the future. What about flow-through entities? All income and expenses from flow-through entities such as corporation, partnership, LLC are reported on Schedule E to be carried over to deductions for AGI. Next one, deduction indirectly related to business activities. For example, moving expenses. Moving expenses are allowed as deductions if a taxpayer moves and change their principal place of work. And some tests must be met before they can take this moving expense deduction. Number one, the distance between residence and new work must be greater or equal to 50 miles of the distance between residence and old work. And number two, actually item two will be two parts, okay? Part one and number two. The taxpayer must stay at the new work for at least 39 weeks of the first 52 weeks, approximately 1 year after the move. Or item two, the second part of item two, stay self-employed for 78 of the first 104 weeks, approximately 2 years. For this one, you may want to see how long do they need to stay either employed or self-employed with example 6-4 on page 6-7 for various scenarios. Okay, number three, driving own vehicles to new residents that qualify for driving expenses can deduct the mileage for the trip. And finally, number four, moving expenses do not include meals and house hunting trips. Please reference example 6-5 on page 6-8. Health insurance deduction by self-employed taxpayers. Congress allows self-employed taxpayers to claim personal health premiums for the taxpayer, spouse, dependents, and children who are younger than 27 years old as deduction for AGI up to the income of the self-employed taxpayer's trade of business. So self-employment tax deduction. Self-employed taxpayers are allowed to deduct the employer portion of the self-employment tax they pay. Please see example 6-6 on page 6-9. And also, alimony payments are deductible for AGI to maintain equity. And contribution to a qualified retirement account are deductible for AGI to encourage saving. For example, the IRA or Roth IRA, whichever one you prefer. And also interest expense on qualified educational loans. For example, that you don't pay your student loan payment interest until you actually finish school, and then you also have so many years to pay. So it's sort of a deferred interest payment, and also whatever your interest payment, which your when you pay back your student loans, that also qualify for some interest expense deduction, depending on your adjusted gross income, and also qualify educational expenses. These can also be excluded. For deduction for AGI. Penalty for early withdrawal of savings. Taxpayers are allowed to a deduction for AGI any interest income forfeited to a bank as penalty for prematurely withdraw a certificate of deposit or CD or similar deposit. This deduction reduces the interest income to be counted toward a taxpayer's interest income. I think I have covered pretty much everything so far. Let's move on to the next one. Deductions for AGI. Deduction for interest expense on loan used to fund qualified education expense. I think I mentioned this one. If it is qualified education, then it should be okay. Taxpayers are allowed to deduct for AGI subject to certain limitation. Number one, interest expense on qualified educational loans, and number two, qualified education expenses. Additionally, Congress has also created a number of related provisions, including education tax credit to encourage and subsidize higher education. So deductions for interest on qualified education loans. Qualified education loans are loans whose proceeds are used to pay for qualified education expenses. Qualified education expenses must be paid for the taxpayer and his or her spouse and dependents to attend institution of higher education. All expenses related to attending college, university, qualify even room and board. The deduction for interest expense on qualified education loans is the amount of interest paid up to $2,500. However, the deduction is phrased out for taxpayer according to the taxpayer's filing status, MAGI, and MAGI for this purpose will equal your AGI plus interest expense on qualified education loans plus qualified education expenses. Married taxpayers who file returns separately cannot deduct such expense. So here, let's look at the summary of limitations on deduction of interest on education loans. And also, if you can reference example 6-A on pages 6-10 and 11. Also, deductions for qualified education expenses. This deduction subsidizes the tuition payments for higher education. Qualified education expenses are limited to tuition and fees required for enrollment at a post-secondary institution of higher education. However, the deduction is phrased out for taxpayer according to the taxpayer's filing status and MAGI. And this one, we already talked about this, about how to get to your MAGI for deduction for qualified education expenses. This one, you may also want to see Exhibit 6-5 on page 6-11 for also the summary. In order to claim the deduction expenses for dependents, the taxpayer must 1. Have paid the expenses him or herself. Number 2, claim the student as dependent. And the differences between deductions for student loan interest and education expenses are: first, the MAGI for education expenses include the deduction for student loan interest. Second, the interest on student loan interest is phrased out gradually over a range of AGI, but the deduction for education expenses is phrased out in specific AGI increments. Please see example 6-9 on page 6-12. This will conclude our discussion on Learning Objective 1, Deductions for AGI. Please attempt some of your problems and questions in the back of this chapter, and also post your questions either on virtual office or discussion under the week this chapter is assigned. Thank you very much.